What's up, guys? Welcome back to another episode of KIO Macro. We have our good old friend here, Mr. Isaac.
How's it going?
Yeah, he
Did
had
you
a
miss me?
Oh, we did. I'm sure everyone did. He had a hiatus where he went through boot camp for the Army. Now he's back. We'll try to get him on here as often as we can, but he texted me this morning and said, "Hey man, I got some stuff I want to say about these tariffs." I'm like, "Dude, let's shoot a video." And here we are. How you been, man? How's everything?
Dude, I've been good. Yeah, a lot of boot camp, as you just mentioned. So yeah, I'm in the Army now. I think it's fair to announce that. I don't know if we did last time, but yeah, I'm a officer now in the Army. So pretty happy. Everything's been kind of like a wild ride. Very difficult at times, but very rewarding. Anybody who I think is like young and not sure what to do in like that early life, I'm not a recruiter, but I would highly recommend looking into the military, because it does provide. I'm like shocked. I talked to a lot of these kids. It really does set you up with like skill sets, 401k, like all these types of benefits, especially for like an early career. I'm a little bit later in life doing it, but it's something I've always wanted to do. So I'm very happy with it so far.
Hey, well, we're all happy that it's working out for you, man. And we're happy to have you here again. And you did announce it last time. Remember we made that joke where I was like, the few, the proud, the Army.
Oh, is it? Oh, okay. Then I did. There we go.
Cool, man. Well, guys, we're gonna do the usual here. I'm gonna just like run through a few charts since it's been a long time since we've done one of these, and we're gonna talk about some tariffs here. All right, so starting per usual with the central bank balance sheet. I think last call we were around right here, so it's just been constantly going down. You can't say the same about the M2 money supply, right? That one is kind of been going back up, and we're like near all-time high levels of money just out in the world. Gold has been dipping but still trending upward. We had like a huge drop in the S&P over the past few weeks, right? This is the weekly chart, and we're like at levels we haven't been to since last May. And obviously, a big reason is because of what's happening with the tariffs, and we're going to get into that. But you can just see all of the major indices just down. Apple's corrected pretty hard, which makes up most of the S&P. Also, Meta's corrected pretty hard. Bitcoin hasn't corrected as much. If we kind of zoom out to the weekly chart, right, we're still trending upwards. Like we still haven't touched the previous high or the previous low, right? And we're still above our 62, so I like that. We're all surprised at how Ethereum has been performing in the overall market as Bitcoin did its rally, and we saw altcoins and meme coins rally, but ETH has been kind of just going through an identity crisis like we talked about in a few videos. And if we look at the total crypto market, still trending upwards. We blasted through this level, which was a strong level of resistance here. And now it blasted through it, and we're coming down to test it as support. So in my eyes, this actually looks really, really healthy. And just a few notable things in crypto. I'm still bullish for the year overall. We'll get into the tariffs and how we think that's going to play out, but institutional capital is buying in. BUIDL had a triple in their inflows. They hit the 2 billion mark, right? So institutions are hopping in. BUIDL fund is BlackRock's digital liquidity fund. If you guys haven't known that, we made a video on that, diving into all of the details of that. And we also made a video on Securitize. And if we look at the World Liberty Financial Holdings, which is the institution that is headed by Donald Trump and his three sons, back in January, they were sitting at 386 million in crypto. And right before they announced the tariffs, they sold off a bunch of crypto. They were holding like 60 million in BTC, and now they're holding 13 million. They were holding over 250 million in ETH. Now they're only holding 21 million. So what this tells me is that they still believe in it, because if they didn't, they would have sold all of it. But we may still have lower to go. Isaac, what's your take on that, man? What's your take on all these tariffs, and like, how are you looking at the market, man? It's been a while.
Yeah, so crypto is holding up surprisingly well, and I think there's a reason for that, in the sense that in most recessions, which I think we're going to be getting into, or falls in the market, you can usually see a reverse like correspondence of the DXY index that tends to go up, because when people leave stocks and leave equities, they tend to fall into US Treasury bonds. They just hold more just liquid capital, and you tend to see the dollar promoted. You tend to see the value of the dollar go up relative to other currencies, because the US dollar is a reserve currency. So even if there's uncertainty in, let's say, foreign markets, that always props up the dollar as the fallback for any financial institution globally. Now, what you're seeing, though, is that's not necessarily the case right now. And because this is a very unique financial turmoil, because The issue with tariffs is not just to do with tariffs, and Trump, believing that we're being taken advantage of. That is part of it, but it has to do with currency. The US dollar has been, since Bretton Woods was established after World War II, the Bretton Woods system, it has been the global reserve currency. And this has always artificially propped up the value of the dollar over what it realistically should be. Because as the global reserve currency, foreign governments and companies and such will have had an incentive to buy and hoard dollars for decades now. And if there's any financial calamities, they can always use the dollar as a fallback, as a stopgap. So banks all across the world have artificially propped up the value of the dollar. This is actually the main issue that the Trump administration is trying to address, because when a currency is artificially propped up, it de-incentivizes exports. And this is why actually Germany has been able to maintain its export economy, despite the fact that it's so developed, because Germany's economy is undervalued by the euro. The euro, since it's a currency that encompasses not just Germany, but also Italy, Greece, and a lot of other more fledgling markets, the euro actually is undervalued to what a pure German currency would be. So the Germans are able to have a currency that makes them more competitive in global exports than they otherwise would have if they didn't use the euro. And the United States has seen this, and they've seen how Germany, despite being developed, because people say if you're a developed economy, you become a service-oriented economy. The United States and the Trump administration in particular has seen how Germany has been able to maintain an export-driven economy despite its, status of a highly developed nation by manipulating its currency, and has basically said, we do not want to maintain the current status quo that overvalues the American dollar at the expense of U.S. exports, okay? And that's really at the heart of it. So the United States is saying reciprocal tariffs because we're being tariffed, so we need to tariff back. That's part of it, but if you actually read the paper that was released by Stephen Moran, he wrote a paper called A User's Guide to Restructuring the Global Trade System. He is one of the architects right now behind the Trump admin's policies in regards to tariffs. So him and Bissett are the two major architects. And both of them have spoken about how they want what's called a Mar-a-Lago Accord. And the Mar-a-Lago Accord would be a reformation to the current financial kind of neoliberal system of free trade and whatnot that would account for the overvaluation of the dollar and would essentially make it so that other countries are no longer able to artificially inflate or artificially undervalue their currency relative to the US dollar. But there would be a currency rebalancing that would make the United States more competitive in an export sense. They would make it more competitive at competing with other countries in export markets. So because of that, and because this tariff war is so focused on the value of the dollar, what the Trump admin ultimately wants is a devaluation of the dollar. This creates an interesting situation where I don't really see DXY being this safe haven. It's going to be like shooting up and stuff. I actually see there's going to be a lot of uncertainty in dollar reserves. There's going to be a lot of uncertainty in the US dollar. And if people are uncertain about holding the US dollar, I actually could see crypto maintain a lot of its current level of support. I think it's probably going to go down, but I do think relative to other equities, crypto actually might overperform given these circumstances.
Interesting, man. So many questions. So thanks for breaking that down. So, well, I guess my first question for you is, how do you see this playing out? Like, how long do you see this lasting? A lot of people have been referencing Trump's book, Art of the Deal. I don't know if you read the book, but I read it. It was a very interesting read. And the theme was when he would do a deal, he would try to ask for everything and then kind of come down and not meet in the middle, but kind of come down a little bit. Do you see him doing that with tariffs? We all see a picture of him holding the board with all of the tariff percentages on there. We've all heard how the countries are responding and, some of them want to collaborate and get together. How do you see this kind of playing out? And do you see him kind of going down on that, or do you just see him holding strong?
So the Trump administration has basically stated that this is a maximum tariff that they have implemented and that they will now be negotiating down from here. That was sort of stated as an explicit policy agenda. So I don't really see any more tariffs being implemented, but I do see now the administration has said, okay, we've shook up the market. We've caused chaos, which was always intended. We have now basically woken everybody up. Everybody is now paying attention. And from this point, the administration will negotiate down. Whether they'll negotiate down with individual countries, which seems like a really arduous task, I'm not too sure about. I think they need to come up with something a bit more comprehensive than like striking deals with every single country. Like maybe some sort of like a Mar-a-Lago Accord, like some sort of like meeting of like a bunch of different representatives to strike a new international accord. But in the current system, I don't think it's going to go up from here, but I do think that these tariffs are here to stay for a while. I don't really think like the Trump administration tomorrow or in the next month or even longer is going to be getting rid of these tariffs. I think this is a more or less permanent feature that will only go away if the administration feels as though it can address the currency situation. And that's not an easy situation to fix, because that's how most countries, especially in the developing world, like make a lot of their money right now, especially like countries like Vietnam, China, of course, but even countries like Germany and stuff. This is how they make their money. Like they make their money by a flexible currency exchange. And if the United States is demanding some sort of peg to the dollar, or has been floated by Miriam, some sort of like maybe he's even talked about a fee for countries that want to hold the US dollar as a reserve, charging them for it or something. So if the United States insists on doing something like this that can address the currency issue, I'd see a lot of resistance from the rest of the world. You'll see some countries like Argentina already wants to, get things sorted out. Taiwan probably has a national security interest to make a deal. I could see maybe even countries like Japan try and strike some sort of a deal, but there's a lot of incentive to not do that. So I think things have to get a lot worse. And tariffs are an interesting thing because they're kind of like a game of chicken, because if both countries maintain tariffs or maintain a tit for tat, we both lose. We both crash the car. Overall trade will go down, overall prices will go up, and we all kind of suffer. This is what we saw with the Smoot-Hawley Act that was in the 1930s. William McKinley, who Trump kind of models a lot of his tariffs off of, he was the president during the late 19th century, and he ultimately saw tariffs as a lose-lose situation, because if everybody maintains them and they get higher and higher, it just becomes a tax on consumers and higher costs for end products. But if other countries believe that you are willing to crash the car, you're willing to keep going tit for tat until, everybody's fucked, then they might blink first. So it's kind of conceptualized as like this game of chicken. And right now the Trump admin is signaling that they love tariffs for tariffs. Like they are, and the end goal is just tariffs. And it's up to the other car to blink first and to try and negotiate out of it. Because Trump is trying to signal, I'm just going to keep going forward no matter what. Tariffs are a good thing. And I think, though, based off of what I've read from Trump's like economic advisors, I don't think that's actually their end goal. I think the end goal is to reach some sort of accord that addresses the currency issue.
No, that's an interesting perspective, one that people aren't really talking about. Here, another thing that I want to get your take on that people talk about in regards to why Trump is like tariffing so hard is that he's trying to bring the Fed to their knees to basically lower interest rates. He's been advocating for them to lower rates since his last term, even though he appointed the current Fed chair. So a lot of people think that he's trying to short-term crash the market so that the Federal Reserve is forced to lower interest rates. What's your take on that?
I mean, I think that could be a good byproduct from Trump's perspective, but I don't think that's his ultimate goal. And I don't think that ever was. Like, he's always been in favor of tariffs as a way to mitigate what he sees as unfair trade policies.
Like going back to the 80s, he was talking about in the 80s. Everything that he's doing has been consistent to what he's been saying since before I was born.
I'm shocked it wasn't talked about more often, but he tried doing this in his first term with just China for the most part. He changed NAFTA with Canada and Mexico. Now he's kind of throwing that out the window. He wants like a new deal. It's even better. But his original trade war was mostly just against China. But the issue with that was that China was was able to easily avoid a lot of the American trade barriers just by trading through third parties. So instead of trading directly with the United States, China would often engage with Mexico and with other countries that would then trade with the United States, acting essentially as a middleman that avoided all of the trade barriers that Trump, was trying to set up in order to deal with a lot of the currency manipulation and other issues that he's brought up with China. So it could be interpreted that his main enemy or the main focus of these trade policies is China. And it's specifically, it's Chinese currency manipulation that allowed them to take advantage of, this neoliberal kind of like economic system to build a massive export-driven economy. And what's also been mentioned a lot is potential war with China over Taiwan. And it's a known fact that in modern wars, in order to win a modern war, you need to have a stronger industry. For the most part, obviously there's other factors, but for the most part, if you're in like an actual like peer-to-peer war, you need a stronger enemy than your opponent. And civilian industries quickly become military industries in a wartime setting. During World War II, the United States converted many civilian industries into wartime industries. Instead of producing Ford, automotives, they're producing tanks, planes, etc. And the United States, because of decades now of deindustrialization, might not have the industrial capacity where if a war with China were to happen, that we could match their output. In fact, we definitely can't match their output at current levels. So there is this sort of feeling, especially within like national defense circles, that a lot of this reindustrialization really has to do with we need to be able to, in a wartime setting, compete with Chinese industrial output. Otherwise, we might be able to beat them in the first blow. But if China can produce 20 times as many ships as us, it doesn't matter how advanced our ships are or, how many more we have right now, they'll outproduce us in the end. In a long enough war, they'd win. Just like with the United States in World War II. We didn't have a massive, wartime industry, but from 1941 to 1945, we became, the largest, wartime industry in the world. So there is concern about that. And if China is able to circumvent trade policies by just going through third countries, the only solution that the Trump administration, I guess, has seen is blanket tariffs around the world. So if China tries to go through Mexico, there is never going to be an area where they cannot, get hit with another tariff.
Fair. That's interesting. So in the beginning of the video, you were saying how you think this could possibly lead to a recession. How do you kind of see that playing out?
I could see this planning out in the sense that obviously if a tariff is incurred, especially tariffs as large as this, there's going to be an increase in consumer prices. I don't think anybody would really argue with that. So the concern is not just recession, but also inflation. Because if we see consumer prices begin to increase due to, tariff policies that either prevent, cheaper foreign producers from being able to import or export to domestic markets, or if it just causes those foreign producers to have to increase, end product prices, the end result is the same thing. You're either buying more expensive domestic products or you're buying more expensive foreign products, and that is a recipe for inflation. So I think that the inflation thing is the main thing that I would be concerned about, especially since we've been, dealing with on and off sticky inflation now for years. It would be a real shame if we see like a massive, spike in inflation that comes as a result of this. But what would be worse is a massive spike in inflation coupled with a recession, because then we have 1970 style stagflation, which is extremely difficult to kind of deal with. That's a very difficult situation you find yourself in. So I think a recession is basically inevitable though, unless we see a really big turnaround from these, tariffs. And I just don't see that happening. I think we're basically going to see a recession, and then we're probably going to see inflation, and it's going to be a lot of hurt. But if Trump is able to strike some sort of, accord or whatever, we could see things change quickly. But I don't see that happening for years at least.
Yeah, that'd be crazy if the Fed has to start hiking rates again.
That'd be insane.
That'd be insane from the high tariffs, and then they have to start hiking rates after they just started lowering them. Oh,
so
man.
I do think that there is a case to be made by the admin that this inflation really is like a transitory, right? Like they will say, no, this is inflation due to an initial shock in the market from high tariffs. But once we bring, reshore domestic production and we start to reindustrialize, you'll see the inflation begin to come down again, because you'll see more industries begin to, reshore into the United States, and et cetera, right? Like this will be the argument that will come out of the administration, because I don't see inflation not going up. Like I think it's going to go up, but the administration will make the case that no, it's just transitory. Just wait for the reindustrialization, and then you will see, inflation begin to go down. So rate hikes are not necessary, right? But ultimately, the U.S. government does not control what the Fed does. So If the Fed decides to increase interest rates anyway, that's their prerogative. But I think there's gonna be a big debate of whether that's necessary or not. The admin obviously does not think it's necessary.
I think it'll be really funny if they start to hike rates, especially given that Trump wants rates being lowered and he did this whole thing. And if part of his motivation is to get them to lower rates, but now they have to hike it, that would be very funny. He'll probably just be in the mirror like, this is terrible. It's terrible.
Yeah, I think it's going to lead to probably Trump. I don't know what he could do, but he might try and use whatever authority he has to just kind of strong arm the Fed into lowering rates, if at all possible.
Man, so with all of this, how are you positioning your portfolio?
So, I mean, initially, I just was like full on liquid. I thought I saw this kind of coming for like a bit, so I haven't been in the market for a while now, and I'm kind of waiting to like deploy essentially. So I'm like mostly liquid. I sold all of my crypto for the most part like a month ago. I am now completely in just like USD and in dollars in the bank, accruing some interest of like 4.5%, nothing like crazy. But I'm kind of like, I'm waiting to redeploy, and I'm questioning whether I actually want to redeploy into crypto a bit more. Because of how weak the dollar looks in this situation, and this whole fight is over like basically the Trump admin trying to weaken the dollar. And because inflation, I could easily see like go up in these instances. I don't know. I'm like debating if I want to kind of like hedge into crypto as like a hedge against inflation. So I don't know. I'm really on the fence right now. I don't have like a strong gut feeling.
Gotcha. I'm sitting on a pretty big cash pile, but I'm just trying to accumulate. I'm just focusing on two assets, man. Ethereum and Pendle Finance. Pendle Finance actually just got listed on Coinbase the other day. Mm-hmm. And they've just been integrating with tons of projects, and they're still like in the top 10, top 12 last time I checked in TVL on DeFi Llama, 3 billion locked in the platform. So I'm just yield farming, accumulating ETH and Pendle, because I still think we'll see a 7K to 10K ETH this year, maybe early next year, depending on how things shake out. So yeah, that's how I'm playing it, man.
You think 7K to 10K ETH?
7 to 10K, yeah.
What do you think? So ETH's been really underperforming. Well, what's your like thoughts on that? Because I haven't really kept up on the specifics.
So obviously most of the liquidity is on ETH, right? And this is the first cycle where we didn't see ETH hit an all-time high before Bitcoin kind of bounced down like a lot, right? I think that ETH is kind of going through an identity crisis. And what that means is that you have all these L2s and, these roll-ups and all these things being built on ETH. So people are like, should I just buy this since this is where the buildings happen? Because people don't really know like, oh, all the settlement's still happening on ETH. Like retail, they don't really conceptualize that. But the fact is, one, when ETH 2.0 happened, we saw a drastic decrease in supply because ETH usage was up. But if you go to ultrasound.money and look at it, we actually have a larger supply of ETH than before the merge happened. So it's a lot more ETH on the market, right? And then the other thing is you had a lot of people buying ETH at between 35 to all-time highs 4,500. So you have a lot of liquidity just locked on ETH, people waiting for it to get back to those prices so they can sell. So I think that once ETH does eventually move, a lot of that liquidity is going to get unlocked and people are going to want to speculate on like blue chip assets. I feel like the meme coin casino has kind of been dying down. Pump fund hasn't been having as much volume. So yeah, I think, and then with the increase with BUIDL fund hitting $3 billion in assets under management and institutional capital hopping in, MicroStrategy still buying Bitcoin. I think ETH needs to get up to like 3,500. And then I think people will start getting excited again. I still think we'll see a major ETH rally. Like it's ETH. So that's kind of what I'm looking at.
That's good. Maybe I should buy some ETH then.
Yeah.
It seems undervalued right now. It seems like massively undervalued relative to everything else.
Dude, even if you go to here, let me pull up this website real quick. So this website, cryptofees.info, it basically shows the top projects in regards to like how much money they're making. They're still making almost $7 million a day, or $7 million per week in fees, $5.3 million a day in fees. So it's like still generating money, and most of the applications are still built on ETH, still functioning on ETH. I was at a event yesterday where I was talking to this trader, and she was saying how like she's really tapped into the VC world. She was saying how like last cycle, a lot of VCs were only investing money into projects that were built on ETH, but now they saw Solana, Moon, and outperform ETH dramatically. So they're kind of pissed off at ETH. So they're really funding like Solana projects, L2s, which is still ETH, like just indirectly. So a lot of people are just like confused. But I think eventually the value of ETH is going to be realized. Like it's working. People are still using it. Institutions are buying it. I think it's just a matter of time. It's a lot of like OTC buying happening. Like a lot of ETH getting exchanged like off the books. But as usage increases and then like the supply starts to go down, I think it's just a matter of time. Like we all know ETH is going to go back up. It's just a matter of when. So I'm just going to accumulate as much as I can until that happens, whenever that happens. Like it's an easy 3 to 7x, 3 to 6, 7x trade.
Yeah. No, I think that checks out.
Yeah, man, that's how I'm playing it. I'm just keeping it simple. I've sold pretty much most of my other altcoins and just kind of consolidated into yield farming, cash, ETH, and some Pendle.
Oh yeah.
Got a few others here and there, but nothing like too crazy.
Nice. Yeah, I get that. I'm out of Solana. I was in like Solana almost completely, but I think that ship is kind of sailed. The meme coin thing, I think, has in the long run actually been a really bad thing for Solana. Honestly, I think they're overvalued. I also don't really get like Solana to me has always been kind of a, I don't want to be mean, but it's always been kind of a joke in the sense that like it's just like it doesn't really seem, it's had like hours of operation and stuff. Like it's had like essentially like and then how many times it's been down that I've tried to use it, and just it doesn't really seem like it's like the greatest, and it's always had like a cult following that just loves it. And I thought that it had staying power just for its cult following, and it's like the cool kind of alternative blockchain. But the meme stuff, in the end of the day, I do think now that it's kind of over, like this whole meme craze is over, it just makes Solana look very unserious.
Yeah. I mean, it's like Donald Trump did launch his meme token on there, which was like, okay, but
That was
just
crazy.
Yeah.
It was like no fucking way.
Dude, it was the one, I was on a 3-day fast, and I wasn't like on my phone, like I'm just trying to like I come back, I find out he launched it. I'm like, what are the fucking odds, man? Jeez, you could, if I would have saw that, I would have bought it immediately.
Yeah.
So yeah, man. Well, I think that's a good place to put a bow on it, man. Happy to have you on anytime. Glad you made it through the boot camp looking fucking jacked over there. I'm surprised your shoulders can even fit in the screen, man. Jesus Christ.
Let's go.
Hey, Marco, don't bring your wife down here, man.
I'm taking. Sorry, guys. Taking. Got 2 rings. One's an Aura ring.
Well, hey, man, it's good to have you back. And yeah, let me know when you want to shoot another one.
Yeah, man. Yeah, I love that. Yeah, if there's anything, I feel like I uniquely, maybe not uniquely, but I work in politics a lot. So like, and this is like kind of shit that I'm really just fascinated by. So I'm glad that I was able to add some perspective on it.
Absolutely, man. Our audience will appreciate it.
Cool. All right.
Cool. Well, take care. We'll see you on the next one here.
Peace out.